Hi everyone, today let's talk about the defensive portfolio for a potential wealth effect reversal and what exactly the wealth effect is and why it is important to continue to watch that as markets do what they've been doing over the last couple weeks. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at this defensive portfolio, we are seeing a reversal in the wealth effect with the economy coming down and the stock market coming down. The resilience is very, very concerning, right? We talked about this on the channel before. The top 10% of income earners account for about 50% of the spending. If we see those top 10% experiencing any kind of income instability or their portfolios coming down, they don't feel as wealthy, they could potentially not buy as much stuff, which is why we do try to track those top 10% earner spending habits. If the consumer continues to weaken, that is not going to be good at all. Significant decreases in interest income because of savings going down. If we're seeing that savings depleted, we're seeing portfolios come down. We could see that top 10% who makes up 50% of the spending pull back, and that becomes a major, major risk factor. So we said wealth effect. This is when you see that top 10% pulling back on spending. We just don't want to pay $7 for cereal boxes. We got gas prices continuing to be relatively high, not as high as they were, but still not great. Interest rates are still quite high. On credit cards, we need to see an interest rate cut from the Fed, but we've seen inflation continue to stay quite stable. It did pull back on this most recent read, which is interesting, but if that continues to come in, maybe that could bolster spending a little bit. They do highlight the fact that U.S. household income net worth has risen by about $52 trillion since the pandemic, which is a really, really strong push, 10 times more than the COVID stimulus. So the economy continues to do well, and we haven't seen that significant weakness yet. But if this does start to reverse, that would be very, very bad for markets and for the economy. So we haven't seen people buying those iPhone upgrades, huge prices on Taylor Swift tickets, very expensive athleisure. Those high luxury brands have started to see a little bit of weakness, and we've been talking about that as well. You still have the risk of stagflation, which I think is a little bit less now with the inflation numbers that we got last week. I still think those are pretty good. But let's talk about some of the potential winners and losers. We've been talking about staples being very, very good. Healthcare and utilities, the classic defensive sectors, have done quite well. Staples, food, energy has done okay, especially on a relative basis. Real estate, I think, is in there. They don't put it on either cyclical or defensive, which is part of why I like it. And then as well as technology, they're including technology in there now. Of course, utilities, those are the biggest defensive sectors. Anything with a boring business model usually does well even in recessionary environments because people don't have a choice. They're going to have to continue to buy these things, pay their rent. For the most part, if we do start to see those things go down, usually everything is crashing and everything is terrible. But if it's a more moderate decline, then these companies should do really, really well. Walmart, Kroger, Dollar General, TJ Maxx, Ross, TJX has also done very, very well in off-price retail. Of course, you have Yum Brands, McDonald's, General Mills, Campbell's, Altria. You can see the list of them here. Really, really good companies that tend to do well even in recessionary environments. Healthcare, here's your list: Colgate-Palmolive, Clorox, of course, CVS. I don't know if I'd put CVS in there, but definitely J&J and United Health. Otherwise, I will definitely link the rest of this in the description if you want to check it out. There are some interesting sectors, but you can see here they say short luxury, short premium retail, Lululemon, obviously a big one in there, Capri, these companies that people are just going to pass on. They're not going to buy these things in an expensive environment. Dash, Kava, Sweet Green, Starbucks, all of these companies have not done well in the recent time, which is another indicator that the economy is probably pulling back. Interesting that they put Apple in short. I think that falls more into the fact that they are under that tariff pressure, but otherwise I would generally consider them a defensive. So there you go. There's some of the things to look at for a more defensive portfolio as we head into the next weeks to months. Looking at Fear and Greed, we finished the week at a 13, up from a 3. We did get a slight retracement here, still very much a downtrend though, so we'll see. We're at those kind of peak low levels. Can we see a little bit of a relief rally? We have a little bit so far, but still kind of in this downtrending structure. Strength incredibly low, way lower than we've been over the last year. Breadth, same thing, lowest low here over the last year. Put call ratio did top out and it's starting to pull back a little bit. We hit that one level and then started to pull back. Volatility still elevated for sure. We're in the 30s, but again, we kind of peaked and we're pulling back here. Are we going to get a higher low on the VIX? That could be interesting. And then looking at safe haven demand, this has had a ton of choppiness. Obviously huge outperformance on the Wednesday, but not enough to get us out of that extreme fear indicator. And then junk bonds. This is the one that makes me the most nervous right now. It seems like markets are potentially pricing in some defaults on these junk bonds. Moving over to the AAII survey, you can see the bulls and the bears really haven't moved a whole lot. A little bit of bulls coming in, the neutral getting squeezed down to a 12, but the bears basically flat. So not a ton of movement, still kind of in this same choppy range. We saw 27 2 weeks ago, 28 here this week, and then the bears 58 from a 61. So there is a little bit of bullishness coming through. Again, neutral getting squeezed. We've seen a huge movement in both directions. So to me, maybe we start to see this swing a little bit more. I think the bulls might give it a little bit of a push here, a dead cat bounce style move, and then ultimately see this continue back to the downside. Just a quick reminder for seasonality, this is typically a bullish period. Obviously, this hasn't mattered very much and I haven't been talking about it very much, but theoretically, April is a relatively bullish period from start to finish. And from current, you can see 11th into this kind of 14th time period, supposed to be basically straight up from here into the end of the month. And then looking at that seasonal calendar here, you can see first trading week of expiration week, pretty good stats for a bullish day there. Bullish day Wednesday, and then you do have Good Friday off for the 18th. So markets are not going to be trading. Expiration day for the third week options expiration is going to be that Thursday. In terms of data, you do have retail sales, Philly Fed survey, not a whole lot this week. And then looking at the economic calendar, really nothing here for the Monday. Looking at the Tuesday, also not a whole lot. Imports, exports, that's been a big talk, but really not a lot there. CPI for the Eurozone, not expecting much out of that. Retail sales for the Wednesday, that's really the biggest one this week. 20-year bond auction, want to see how that performs. TLT has been under a little bit of pressure. Want to see how this comes in. Want to see that yield come in a little bit below the 4.5 area. That would be interesting, but yields have been going higher, so not a great look. And then you got Fed Powell speaking that day as well. And then for the next day, Philly Fed manufacturing, that's the big one. ECB conference, that could be interesting. Interest rate decision expected to be a cut there. And then for the Friday, remember it is off for Good Friday. And then moving over to earnings, remember we kicked off earnings on the Friday, which so far so good on the banks. We do have Goldman Sachs to continue here on Monday. Bank of America, Citigroup, PNC Financial, United Airlines, fairly interesting. Want to see how they are doing. One of those bellwethers for how the economy is doing. ASML, Progressive, US Bank Corp. And then Thursday, we get one of those first bigger tech stocks with Netflix kicking off in the after hours on Thursday. United Health, fairly interesting. And then there is nothing here for the Friday. So just kind of starting into that earnings season. Moving over to Max Pain. Max Pain for this week is $5.50. You can see current price $5.34. That should give us a little bit of a bounce. You can see put walls at $5.40, puts and calls here at $5.50. So that's kind of the range that I would expect to go into, at least a little bit above $5.40. So to me, that says a little bit of bullishness from here. I think 545 is in play, maybe even as high as kind of 549 in here makes sense, but there are just tons of puts. Put call ratio at 2.47 here for Max Pain. Overall, I would expect markets to be a little bit bullish for the Max Pain finish. And then moving over here to that weekly chart, starting off with the S&Ps, you can see it was up 5.6%, retested this kind of consolidation low, the lows back here from September, and then closed just below it. The volume was really strong, dipped low to the trend line, caught a bounce from here. I still think we're probably going to see at least a little bit of a retracement, maybe up into here. 560, 564 could be interesting. The kind of high from this consolidation, and then we touch that zone, and then I would expect this to continue back to the downside. Some of these bear market rallies can be super aggressive, so keep that in the back of your mind, but we did hit oversold conditions back here last week, and then this week we did get a nice little step up. Want to see this rally until we at least hit the SMA on the RSI, which right now it's at a 51.19. RSI is at a 39, so we have a little bit of room for that to kind of continue up, touch that SMA, and then we'll see if it rejects from there. And then looking at those key levels here, the key level that we're at right now, 535.72, we'll see if we can get above there and push to that kind of 559.76 area. Got some intermediate levels to work with. 550 I think is interesting, 540.90 is interesting, but realistically, if you can get above this kind of 535 area, I would expect this to continue back up to that 559, 560 zone that we talked about in here. and then we'll see if it does reject from there. Currently, momentum stepping to bullish, RSI stepping to bullish on the daily chart. Then moving over here to the Tasty charts on the weekly, you can see we got into super oversold conditions way below that lowest ATR band at 520.53. Obviously, that'll continue to step down here. One more iteration close to the kind of 511, 512 area is what I would expect. Support is still that 144 EMA at 503.60. We'll see if that continues to hold as support. We tested it 2 weeks ago, tested it again this week, and still closed well above it. So far, anything below that level is a buy. Still very much bearish conditions, though, on the charts. And then you got that 8 EMA as resistance, 554.46. Either way, though, I think we're going to start to kind of retrace into this area, 554 to maybe that 560 area. I think that'll be interesting, and then I would expect it to roll back to the bear side after that. Then looking at the daily chart, still very much bearish conditions as well. Trailing stop, 559.74. So again, a lot of things are kind of pointing to that 555 to kind of 562 area as a zone of resistance. You can see the 55-day moving average there at 566.63. I think that's probably about as high as we could go if we even got into that area. 556, somewhere in here, the trailing stop could be a major resistance as well. So either way, short term, looking for a little bit of a bounce into here, and then I'm expecting a continued sell-off back to those lowest lows on the weekly ATR band. Moving over to the NASDAQ here on that weekly chart, again, 7.5% to the upside, very similar to what we saw on the SPY charts. Went down to that next low here, hit the low back from April, hit that key level for 1143. Didn't quite get to that 144 in the 200. I still think we are going to touch those at some point. That does correlate pretty heavily with this consolidation high back from July of 23, which I think is important. And you can see the high back here from November of 21 at that 393.31 area. Highly expected to touch that area. So I think we're going to touch the 144, touch those key levels over the medium term, but in the short term, still looking for a little bit of bullishness here. We're above 446.65. The next major resistance for me is 477.84. And then looking at that daily chart here, you can see really clean on the Friday close, dipped heavily on the Thursday, closed above that level on the Friday. Want to see it get above 459 and then start to push to that 477.84 area. I think is kind of the culmination point in this consolidation zone here. Maybe we overthrow it into the 490s, but either way, if we did get that high, I would expect it to reject pretty heavily from there. And then you do have a ton of room to the downside from that retracement. So if we did get there from here, that would be about an 8.5% up move from there. And then you would expect that lowest low, which would be about another 20% down. So wide ranging moves. We'll see if we can get into that zone or not. It might just kind of fade out in the 477 area. Either way though, short term bullish for me. Moving over to the Qs on the Tasty charts here, you can see that same zone of resistance we talked about, 475 to this kind of 494 area. Again, I still think we're going to get there. I still think we're going to see a little bit of a more powerful retracement into that zone. But for now, we're still kind of finding support at that 89 EMA on the weekly chart, which right now is at 452.35. Want to see it hold above that level and continue back into this zone here. And then I would expect that lower high set up from here. Maybe we even rally as high as this one here at the 498 area. That would be interesting. I don't really think we're going to get there. That would be a little bit of a change in structure if we did get that high, but I just don't think it's going to happen. And then we'll see a continuation lower back to that lowest ATR band, which right now is 433.50. And then we could see this trend down a little bit more next week into the 423 area, which would take us right back to that 144 EMA. And then ultimately, I do think we'll retest that or potentially get a lower low from there. And then looking at the daily chart here just for a moment, you can see that ATR trailing stop, 475.87. So again, expecting to touch that zone, expecting to touch that trailing stop, and then I would expect that to act as resistance and push us back to those lower bands. On the daily chart, that lowest band is 413.89 right now, and I would expect that to step down a little bit closer to that 411, closer to that previous low back here, 409 area. Moving over to the Russell here, you can see the Russell was still slightly positive, only 1.75%, but it is still back above this trend line here, even with the previous dip below it and then the dip this week. The trend continues to hold, so next week that's going to be 181.50. Can we rally back up to this trend here certainly a possibility. Will it happen? I would still say probably not. The Russell has been an underperformer here over the last week to 2 weeks. Can it hold this zone? I think so. Can it push to here? Probably not. Maybe we just kind of grind sideways in this zone, kind of 181 to that 192, 193 area makes sense. You have that zone of resistance in here. We were oversold. We're still seeing a little bit of a bounce. I think there's plenty of room for a bounce, but I still think it will underperform relative to the other markets. And then looking at that daily chart, you can see that same consolidation. We're in the same range we've been in. Can we rally up to this zone here? There's a ton of room for us to even get to that 21 EMA all the way up at 196.7. Can that happen? Certainly it can. Momentum stepping to bullish, RSI stepping to bullish. On a relative structure, it doesn't look super great, but in the short term, it does look slightly bullish. Moving over to the IWM on the Tasty charts, you can see on the weekly, we are still well below that lowest ATR band, 186.70, which again for me says this should be slightly bullish, maybe into this kind of 202 area. That would be interesting. But again, if we did get that high, I do expect sellers to start to come back in and drive this price back down. The weekly chart is still very oversold, so that gives you a stronger potential for upside. But looking back to that daily chart, you can see resistance is kind of 195 to this kind of 198 area, this previous low here. If we rallied there, I would expect to reject off of this consolidation low and then get that lower low off of that zone. Moving over to the Dow here, you can see the Dow was up 4.88%. Same thing though, I still think we have a little bit more. We'll touch these kind of consolidation lows and then I would expect this to dump back down. We still haven't touched that 144 in the 200. We got very, very close, but I still think we're going to pull back and touch that at least at some point. Want to extend out that trend line. Wow, that does kind of top out right there. So we'll continue to watch that zone here. Touch that trend line rejected. For next week, that trend line is going to be in the 408 area. But realistically, the level 412 and then this zone here makes sense to me as a zone of resistance, and then we'll see what happens after that. Moving over to the equal weighted S&Ps, not as strong here, more similar to the Russell. It was up 3%, so not as much as the Dow. We're in this consolidation low here. You can see that 162.57 level is that kind of low. We're in the zone, 160 to 162. Touched the 200, touched the 144 already, touched the highs from this zone here and did catch a bounce. Can we see a little bit more rally? Maybe as high as 173 might make sense. This consolidation low, the same one we were looking at on the other charts, but relative strength says maybe not. You do have plenty of room off of that oversold condition to rally back up, hit the SMA, and then continue lower. Key level for me is 149.82. We'll see if that zone holds or not. You can see that's the consolidation low from this previous peak, and we are right at that peak right now, January of 22. Current price 162, that kind of level 164, somewhere in there. So we'll see. We'll see if we can get above that level or not. There is a couple of levels to work with, and structurally I still think we should see at least a little bit of a retracement. Moving over to the ratio SPY Russell and NASDAQ SPY, you can see the SPY Russell did continue to go higher, so the SPY is massively outperforming. We said the Russell looked terrible on a relative basis, and that is definitely true. But we did see strength from the NASDAQ this week as well. The structure on the NASDAQ does look a little bit bullish, momentum stepping to bullish. Can we get the NASDAQ leading over the next couple weeks, which should give markets a little bit of room to the upside? That would be interesting, and that is what it looks like. So a little bit of NASDAQ outperformance, a little bit of SPY outperformance versus the Russell. The Russell looks like the worst of the three right now. We are a little bit overbought on this ratio, but either way, I still think NASDAQ first, SPY second, Russell third. Then moving over to the SPY divided by the M2 money supply, you can see we did get very, very close to that 2205 level. This is the critical level. That 200 SMA is there as well at 2210. Super, super important. You can see on a relative basis, this is a little bit weaker than the SPY. We hit the 144 week moving average, touched that level and bounced a little bit, momentum bouncing. We did hit oversold conditions. Again, structurally, we should see this rally a little bit, same as we saw on the previous charts, but very, very close. 2205 was the zone we thought we'd touch. We did get as low as 2224. So within striking range for sure. Are we going to rally back up and touch it truly? I still think that's going to happen. Moving over to Apple and Microsoft. Apple was up about 5% after going much, much lower on the session. From the lows, we were down about 10%, and then we finished up about 5.25%. You can see key level here. I put the key level at 196.79, which is this kind of consolidation high. I understand if you want to use the 199 area, but I like 196. I think it makes a little bit more sense to me. We're right at the trend line. If it can hold this zone, I think there's a little bit more potential for upside. Apple is still going to be under a ton of pressure with those China tariffs, so not super great on that. And then looking at Microsoft, you can see 194. 394.22 is the key level. We couldn't quite get above that. We did have a nice push through 372.08. Got above there, pushing towards that next level. Momentum stepping to bullish. RSI already right at the SMA. So are we going to reject from here and go double bottom continuation higher? That would be interesting. You are already in a zone of resistance. We were very close to the level. The high was 393.23. So missed it by just less than $1 in that zone. Is this the consolidation zone where we reject from there and go lower? Certainly a possibility. But remember, the overall structure for markets for me says a little bit bullish. I think maybe we go to that 413 again, test that level and then reject. That would be interesting, but I would watch it closely at 394. Moving over to Tesla and NVIDIA. Tesla was actually up on the week, 5 1/3%, throwing wicks in both directions. Support continues to be this 214 level, the low of this consolidation back here from October of 24. Still cannot close above 264 though, so that's kind of the range that we're in. Through big wicks to that area over the last 3 weeks, through wicks to the lows this week, and then 3 and 4 weeks ago. So volume coming through. You like to see strong volume on the buying pressure. On a structural basis, sometimes when you see these really strong moves up, full round trip of the move, find support back at that previous low, you can see this kind of strong push back up into the almost high range, or at least a lower high, pretty close in here in the like 350 to 360 area. That could be interesting. I'm watching Tesla pretty closely here at these key levels. If we can close above them, I think there's strong potentials for a bigger push higher, maybe as high as the 21 EMA all the way at 346.84. That would be interesting. And then looking at NVIDIA, strong candle, 17.6%. We said if we got into the zone, buy NVIDIA, and so far so good on that. But we are in a zone of resistance now, 116.70 and the trend line as resistance. Next week, that's going to be at about 117.89. Moving over to Alphabet and Amazon. These had good weeks as well, 8.1 and 7.8% respectively. Momentum on both of these stepping to bullish. Volume coming through. Want to see these come up and retest the SMAs on the RSI at a minimum. Want to see it push into that zone. Alphabet, I think, can get to 179 to this kind of 185 range in here if we do get a continuation to the SMA. And then similarly here for Amazon, somewhere between 200 and 212 makes sense for me. Get the lower high set up and then the continuation lower to that lower low. Moving over to Broadcom and Meta here, you can see Broadcom had a good week, almost 24% to the upside, absolutely crazy. Fully engulfed the previous candle. Came down to that key support, 143.80 was the level. Thought we might touch 136, that was the low back here from September, but we ended up holding here at this kind of consolidation top, so strong move there. If we get semis continuing to lead to the upside, that could lead to kind of overall buying pressure. That would be interesting. Meta, on the other hand, continues to find resistance in this trend line. Rallied up, overthrew it pretty substantially, but closed back below it in this kind of very gentle sloping line there. In terms of resistance, 539.77 closed above that. Your next one would be 564.51. Moving over to staples and discretionary. Staples had a good week, 2.41% to the upside. Discretionary slightly better at 3.79, but on a structural basis, not very good at all. You can see we did come down and touch the 200. This is what we thought was going to happen. Sure enough, we did get the continuation to that level. Ended up bouncing from that zone, 174.76. Similar to Tesla, and it's obviously pretty heavily driven by Tesla. You can see the push here, full round trip of the move, consolidation at that level, and now are we going to get a nice little push up to here? I don't think that will happen. That could happen, but not with the current geopolitical risk across markets with the tariff news. Is that going to get re-implemented in 90 days? Are we going to get some deals? We'll see. And then looking at staples, I think we can at least go to the trend line here up around the 81.48 area. This is kind of an expanding wedge here. You do have a nice double bottom. We were supposed to kind of come down into this range, but we ended up holding a slightly higher low on a closing basis. And for me, that looks slightly bullish. I think we can push back to the 83.43 area if we can get above this trend here at 81. Either way, I think we'll test that and continue back and hopefully continue back to these consolidation highs. Moving over to real estate and transports. Real estate still closed negative on the week, but it did dip all the way to that 35 area. Really, really good buying opportunity. We've said anything really below 38 has been an awesome buying opportunity, but realistically anything below 41 has been a buy. You will eventually see it push back up into those zones there. In my opinion, Either way, you're getting a better yield anywhere near that kind of 35 and below range, I think is an absolutely amazing opportunity. Even going back to the formation here, you can see 29 to 33, great opportunity. If you get below 35, it's just about as good of an opportunity in my opinion. So real estate continues to look really good in this range, 38. I still think it's a buy in there. And then transports. On the daily chart, you can see that same kind of consolidation, still very much a downtrend, but this peaked a long time ago. You can see the peak back here in November of 24. Markets continued a little bit higher, but transports not doing it. And you can see it here on the weekly chart. High, lower high setup, transports showing weakness, and they eventually did lead markets to the downside. In terms of a retracement, they're not really doing it right. So you have a little bit of a move. The level is 59.21. We're right at it, 59.15 on a closing basis. Maybe we rally up, hit some of these zones in here, 64, 65, I think makes sense between those areas. And then if we do retest that SMA, I'm still expecting a lower high setup, potentially continuation lower. There's plenty of room to the downside here. If we're actually truly headed towards a recessionary environment, I think this is going to go towards that highly traded zone around the 48.11 area, the same zone that we were in back in January of 18 up until about February of 20. Moving over to breadth, really strong moves on breadth for the week. We talked about it on the Friday video, really strong and certainly not overbought by any means. Even with that strong move, I still think this will go a little bit further into the kind of 36 to 45 area, somewhere in here. That's where we stalled out last time and then continued back to the downside. Either way though, short term, dipped to a really low level, should see a little bit more bounce there in my opinion. Again, very short term, watching all those key levels, we could absolutely reject pretty much anywhere. And then looking at 50-day, same kind of thesis, did get really low, same lows we saw back in these zones here. Ended up bouncing. I think we can get back to this kind of 40 to 52 range, see that lower high, and then get that continuation lower. Moving over to 200-day breadth, you can see that week that we got dipped all the way down into the 15 range, very low level for that, but we ended up bouncing from that zone here and then pushing back above this level here at the 24 area. Does this mean we're going to get a continuation back up to here? I think that is certainly a possibility. We do need to watch that zone as a potential zone or a potential target. I think 36 could be interesting here as well, this consolidation low there, but we'll see if we can break through that level or not. Then we're looking for that kind of 50 to 56 area. Is it going to happen all in 1 week? Absolutely not. Will it take several weeks? Probably. Either way though, understand that the 200 did finally hit a pretty low level, and now we're starting to see a pretty decent bounce from there. Moving over to the dollar here, big down week, 3% down. We're just at these lows here, critical level 99.83. We're going to see if we break through those lows or not. We're going to need to add a level here. It's been a long time since we've had to do that on the dollar, but that would be 96.85, the consolidation low from here. We'll see if we push down to that low, some trend lines in there, momentum bearish, RSI bearish. Really want to see the dollar gain a little bit of strength. The dollar has been falling dramatically, like I said, and that is a terrible indicator for the broader economy. Usually that's good for equities, and it was a little bit, but not the same way that we would expect to see it. So dollar weakness here. Yields going higher, very concerning and something to watch as we go into the next week. If this level breaks, I think we're headed right down to that 96 area. Moving over to the VIX, we did get above that 44 level. We peaked out around 60. When we do get that high, that is typically a good bottoming opportunity, a good buy opportunity, which again generally fits with the overall thesis that this is going to pull back a little bit, at least into this kind of 25 range. I think that's where we're headed. 28 could be support as well. You have a ton of trend lines of consolidation in here between this kind of 25 to 28 area, and I would expect this to continue to fall at least for 1 week. Moving over to my accounts, I ended up net positive about $2,000 on the week, so pretty good week for me. Continuing to stay positive in my IRA. I haven't taken any trades in there recently. You can see my day trade counter is at 0. And then in my main account, did pretty well on the week. Overall, no positions going into the weekend because I think we could absolutely go in either direction. But looking at this analysis, I'm going to stay a little bit bullish bias-wise heading into the Monday, potentially the Tuesday, depending on what we see. But of course, if we start to see levels break in either direction, I'm going to shift my bias. It could absolutely go either direction from here, which is why I didn't hold anything into the weekend. So Again, overall, short-term bullish, but I do think there is potential for some of those levels to be a little bit stronger as resistance than I initially expect. Let me know down in the comments section what you thought of the defensive portfolios. What do you think of the wealth effect? Is that wealth effect coming to fruition? And what does it mean for the broader economy and the stock market? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.